Good evening, everyone, and welcome. Stocks continued their spring sell-off today, remaining as cool as a baseball player in an early season slump. Today's decline was broad-based. It affected big blue-chip shares as well as the tech and smaller companies that have struggled over the past month. Now, valuations have many market pros worried. So do earnings. They aren't expected to grow much when first-quarter profit reports start coming out tomorrow. Now, send small children out of the room. We warn you as we show you these numbers. The Dow down 166 points. That's a 1% decline on the day. The Nasdaq completing its worst three-day slide since November of 2011. It was off another 48 points today, falling to a two-month low. And the S&P 500, well, it hit an all-time high just a week ago, but today down another 20 points, capping its worst three-day slide in 2 months. We have two reports on today's sell-off. Bob Bazzani at the New York Stock Exchange, but we begin with Sheila Dharmarajan at the hard-hit Nasdaq.
Despite the overall losses, some traders were encouraged by today's action, pointing to pockets of strength from sectors that were recently under pressure. Biotech, for example, which has been a weak sector, did see a bounce back today. The Nasdaq Biotech Index posted a gain, and companies like Gilead, Celgene, and Alexion Pharmaceuticals ended the session on an up note. Also so-called momentum stocks, so stocks that consistently move in a direction regardless of news and sometimes regardless of fundamentals, also showing selective strength today. Facebook and Netflix, for example, ended the session with small gains. Now, some traders point out that despite today's overall loss, the bounce back we did see in some of these sectors is encouraging because it could mean that overall sentiment is improving and that the pullback that we have seen could be on the mend. For Nightly Business Report, I'm Sheila Dharmarajan from the Nasdaq Market Site.
It was a roller coaster day, and while stocks ended well off their lows, there was still a lot of damage done for the second day in a row. Biotech stocks, which had been hit hard recently, were mixed today, but many big Nasdaq internet-based names, these are names associated with growth and momentum like Pandora and Groupon, were again weak today. But there was even broader damage this time. The financials, for example, were weak, as were home building and leisure stocks, and even small retail names like Aeropostale. It's true that the S&P 500 is only a few percentage points off the historic highs it hit last week. But if this continues for another few days, there will be greater concerns that the market is moving toward a real correction. The Dow Industrials, for example, has lost about 350 points in just 2 days. For Nightly Business Report, I'm Bob Bazzani at the New York Stock Exchange.
Art Hogan joins us now with more analysis on what's next for stocks. He's Chief Market Strategist at Wunderlich Securities. Art, nice to have you back with us. What's your take on today's selling? Is this just sort of a natural profit-taking, or is something more troublesome going on? Is there a real correction, as Bob Bazzani was talking about?
Well, it's interesting, Susie. We ask ourselves that question all the time because we haven't seen a correction of any magnitude, or at least a 10% correction in a very long time. So whenever we start to see some selling pressure, which we haven't seen a whole lot of, it begs the question, is this something real? Is this going to turn into something large? Are we heading into a bear market? And I would think it's not. I think this is a normal pattern of selling. I think that if you look at the momentum stocks, which have been selling since about February 25th or 26th, that is starting to spill over in the broader market. When people start to get that sense, it becomes very self-fulfilling. And I think people that are, especially people that are invested in ETFs that cover broad sectors or indices, when they start selling, that takes the whole market down with it. So I'm not as concerned that this is turning into something larger. I think the selling pressure will abate over the course of this week, and we'll find some bargains out there.
So normal pattern of selling, Art, does that mean I should feel good about the money I'm losing or not?
Well, Tyler, as good as you felt about the money you made, in the last 12 months, we've, had a very significant run here. I think that it never feels good, on the way down, but it is an important reminder that stocks go down as well as going up, and I think that that's going to continue to be the case. I think as we look at what's happening here, this started as a rotation out of momentum into value. That rotation into value stopped a bit over the last 2 days, but you're still looking at, an S&P 500 that's flat on the year. You're looking at a Russell 2 that's taken much more of a hit, and certainly a Nasdaq composite that's taking most of the bludgeoning here. And I think that's more indicative of a rotation than it is a broad market sell-off.
The usual catalysts for a market rally just don't seem to be there. It's usually like some kind of Fed policy, strong economic numbers, strong earnings. They just don't seem to be around this time. So what are going to be the catalysts to take stocks higher from here?
I think it's going to be three things, Susie. That's a very good question. I think a continuation of the improvement in the economic data calendar. I would point you to things like the auto sales. The auto sales that came out last week, much better than expectations. If that continues, that means that weather-related slowdown we saw in the first quarter has turned the corner. I think earnings reporting season, not necessarily in the headline numbers, but the revenue growth is probably going to be stronger on a percentage basis than the earnings growth is this quarter, first time in this cycle. And I think guidance, because of the sort of pull forward into the second quarter from demand for goods and services that were gone in the first quarter, is actually going to be more robust than we've seen in a while as well. So slightly better earnings guidance than we've seen in a while, and better economic data I think is going to be the turning point, and that could happen anytime in the next 2 weeks.
You know, valuation on the Nasdaq got a little stretched by any standard, and that's probably why the Nasdaq has suffered as much as it has. But it is hard for stocks to make much headway in a zero earnings growth environment. You make a very interesting point about revenue, but earnings this quarter are expected to come in roughly flat.
Yeah, you know, we were expecting earnings to come in pretty slight to the upside in the fourth quarter last year. We tend to miss our marks, and remember how well the fourth quarter came in when, you know, everything was tallied up. So yeah, if we're going to come in flat, then we're ahead of ourselves in terms of valuation. But if we take the estimate for the entirety of this year and next, we're only trading at about under 16 times, you know, this year's earnings and about 14 times next year's earnings. Those are fair multiples, and I think that what we're going to start to see is earnings that actually grow for the right reason, the virtuous reason, which is revenue growth and not just buybacks and things of that like.
Okay, we're going to be watching carefully. Thanks a lot, Art Hogan, Chief Market Strategist at Wunderlich Securities.